What's up, guys? Some weeks back I did a video where I was just documenting my process and letting you guys know the trades I was going to be taking for the upcoming week. That video went very viral. A lot of people passed their pro firm accounts. I got a lot of testimonies, and that motivated me to create more of the similar videos. Last week Sunday I did another video that also got more than 10,000 views in less than 2 days, and I got a lot of testimonies like these. People pass their pro firms accounts, people get funded, people get paid out in forex trading. So that has motivated me to still do more follow-ups on the trades I'm going to be taking for the upcoming week. So today is Sunday and the forex market is going to be opening very soon, and I'm going to still be taking you guys on the process of the trades I'm going to be taking coming this week, so that you can be able to take the same trades with me, so that you can be able to pass your pro firm account the same way I use the same trades to pass my pro firm account, like this. Before I even go into the video, I'm going to be taking the first 3 currency pairs that got me, because last week I was trading a $500,000 account. I had 2 $200,000 accounts and one $100, making a total of $500,000. That was my target for the entire week, to pass those challenges. All right, so by the end of the week I passed 2 $200,000, and one of the $100,000 is still on 5%. So I'm going to be taking one of the $200,000 which I passed using only the technicals, because remember, when it comes to trading, I have technical strategies and I have robotic strategies. Robotic strategies will be handled by Patrex Pro. All right, you guys already know Patrex Pro. While technical strategies will be handled by the trades I'm going to be showing you guys on today's video. All right, so let me just take one of the $200,000 account that was passed in 2 days using 3 trades. 2 days using 3 trades. So let me just make sure I put everything recording on my computer. Then I'm going to quickly show you guys everything. So this is one of my $200,000 account with the funded next, and I'm going to be doing a detailed video breaking down this prop firm. This is one of the best prop firms in the industry. I'm going to be doing a detailed video breaking down their parameters and how you can trade with them. So don't worry when it comes to that. All right, so if you can check on my screen, what is the status here? The status here says current result. What does it say? Pass. 200,000 phase 1 is already passed. 8% was made. 8% of the account was made in 2 days, and the account is already passed. If you can check here, what does it say? So they gave me even a minimum of 5 minimum trading days, but I passed the account in 2 days. Using what? Using only technical. This was the account I passed using only the technicals. And you can just pause the video. You can see on my screen all the parameters are already ticked. I'm just waiting for 2 days or to make the 5 minimum trading days and the $200,000 phase 2 be given to me. No matter what, so long as I've passed phase 1 with 8%, there is nothing that can stop me from passing phase 2. All right, so that was not the purpose of the video. I was just showing you guys this, how powerful the analysis I gave you guys on Sunday are. Very how powerful they are, and how you need to be able to take it very serious. So please, even if you don't want to trade it on your live account, open a demo account and practice. Take the same trades I'm going to be giving you, because this is more like giving you guys at the same time teaching you guys to fish and also giving you guys fish, or at the same time teaching you guys how to generate your own signals and also giving you guys signals. So please take this very seriously, because the same trades I'm going to be showing you guys on these videos are the same trades I'm going to be trading for the entire week, are the same trades I'm going to be using to pass all these accounts from phase 2 to funded to getting cash out. Those are the same trades I'm going to be taking. All right, so with that being said, let's quickly go to trading view and just go through the 3 currency pairs, or the 3 pairs that got me funded, or that got me 8% of my account in 3 days or in 2 days. All right, the 3 currency pair were just Nasdaq, gold, and Great Britain pound JPY. And you can see I like the combination, because you guys think maybe the strategies I used to give you guys will all work on currencies, or will all work on commodities, or will all work on indices. But you can see one of the trades I took was on indices, which is Nasdaq. Another one was on commodity, which is gold. And another one was on Forex, which was what? Which was on currency, which was what? Great Britain pound JPY. So you can see the same analysis I gave you guys on my trade, the same setups I gave you guys, or the same way of trading I gave you guys will be able to work on any asset. All right, so let's start with the first one, which on this particular one I made a risk to reward. I got because the first one, I got a risk to reward of 1:3, 1:3, and 1:2. That's the importance of risk to reward. The importance of risk to reward. All the 3 trades were winners, and the first one I made 3% of my account, second one 3% of my account, and the last one I made 2%, making 8%, and boom, the account was already passed in 2 days. So let me show you guys quickly. I'll do another video where I'll be showing you guys the other $200,000 account which I passed using robotic trading. This one I'm showing you guys is the one I passed using technical trading. All right, so let's just start here. You can see this is what this is. US 100. US 100 also stands for Nasdaq. You can also call it US Tech, NAS 100, or US 100. They all stands for the same thing, which is Nasdaq. All right, and remember, please, you need to watch this video to the end. I don't, even if it's 50 minutes or 1 hour, you need to watch it to the end. And I'm going to put time stamps, meaning if you want to look for analysis about a particular currency pair, you can just go on that time stamp and you'll be able to see that analysis. All right, so I'll try as much as possible to put timestamps. So please watch this video to the end, because throughout the video I'm also going to be giving you guys trading tips from my 8 years of experience. So it's not just going to be analysis, I'm also going to be pausing and giving you guys trading nugget, trading tips that no other person on the internet is going to give you. So make sure you watch the video to the end and come back and watch the video, share with someone, and please, if you haven't subscribed, make sure you smash the red subscribe button on button below to subscribe to the channel, and also leave a thumb up on the video. Leave a like on the video, guys. The more like I get on videos like this, it let me know you guys are also enjoying the content. So please leave a like on the video. Don't forget, leave a like on the video. Let me give you a second to leave a like on the video and subscribe to the channel if you haven't done so. Do quick. Perfect. Good. So the first currency pair or the first asset we have here is what is Nasdaq. On Nasdaq, this was last week. This area here was last week. And what did I say last week? Last week we had a structure. This is where we were last week. The whole of this from year to year was this week that just passed, right? So last week Sunday, if you can remember on the video, you can always pause and go back and watch the video I made on Sunday. You'll be able to see the same setups, the same analysis I mentioned, and the market went the same way we predicted. All right, good. So in most cases, 90% of the time, the market gave us the high probability of going in our direction. So this was Nasdaq, and here this was on Sunday. And what did I say? I said at the open of the market, there are two-way scenario. So at that point in time, we were just waiting for any of the scenarios to occur. I said, I remember very well, the market was somewhere here. Let's just say the market was somewhere around, and I said at the open of the market, let me just remove this. I said at the open of the market, we're going to expect something like this. The market will either, because remember the market was bouncing on support and resistance, right? I said at the open of the market, we should expect the market maybe after a day or two to come back to our support, then continue shooting up, because remember the market was in an uptrend, right? So I said that was the first scenario. Or if the market open and the price doesn't shoot back to our support, we'll expect something like this. And if we expect something like this, we should wait for what? A break and retest, and then we'll continue on the upside. So those were the two scenarios I gave you guys. And what happened? The second scenario happened. The market opened, and instead of the price pushing back down, it continued going up. So it broke that particular resistance, and we waited for what? We waited for a retest. As soon as we had a retest here, this is where I got into the market. All right, this is where I got into the market. And if you can check somewhere here, boom, this is the exact thing I'm talking about. All right, the market opened somewhere here. Instead of the price pushing back down here, we instead saw the second scenario, which was the price pushing up again to form another higher height, then came back again to retest this area. If I have to zoom this chart, you can see this actually this week that pushed right down to this particular resistance, which became a support. So this is where we got into the trade. This is where I got into the trade on Nasdaq. As soon as I got into the trade on Nasdaq, you can see here, this was my risk. Let's just go here. Let's click on it. You can see that's a risk to reward of 1:3.1. So I was risking about 100 pips, and I was going for 300 pips, and boom, you can see that was just before the end of Thursday. Before the end of Thursday, we've already hit our take profit, and that was 3%. Bang, we got in somewhere here, got out somewhere, boom, 3% done for the day. All right, good. So that was that for last week. Now what about this week? Let's talk about this week. Let's not only talk about last week. What about this week? What is happening, or what are we waiting for this particular week? All right, if you can see this particular, I have something I used to call the minor, all right, the minor resistance. This particular small resistance I'm seeing somewhere here, the market is already trying to break this small resistance somewhere here. But this is not powerful enough. So what am I waiting for again? I'm waiting for something like this. Look at this, guys. Look at this. Let me just quickly show you guys this, because the market is trying to form again another resistance somewhere here. And if I can go on the daily time frame, this is what is giving me a lot of confidence. See this on the daily time frame. Can you see this? See this on the daily time frame, guys. See this on the daily time frame. Can you see this area? Let me just show you guys this area. This area from here. Can you see this? This area here, and this was, what was it? This date? This date was, I think, right in 2022. We had the market. We had this swing somewhere here, and history is repeating itself. Where are we? We are at the same spot. So this is a very key area on the daily time frame. So if the market has to break that particular area, what is the next area we're looking for? We are looking for this particular area up here. That is our next target. We are looking for this target up here. All right. So what are we doing again? We already know, just on the daily time frame, we already know the key areas we're going to be looking at. And on the daily time frame, we know that, okay, if the market has to break this particular area, this is where we're going to be targeting. Even if we're going to be selling or buying, we're going to know that on the macro or the macro trend, the market is more bullish. Of course, the market has been bullish on the daily, both the daily and the 4-hour time frame. So we already know our key areas. All right. And another key area we also know is this area somewhere. So we know this 1, 2, 3. Presently, we are here. Let's see if the market is going to jump inside here and we look for bullish opportunities, or if the market is going to pull back inside here, break the structure, and we look for bearish opportunities. Let's go back to the 4-hour time frame now to conclude on what we're going to be doing as soon as the market opens. Good. Since we already have these key areas, these are the key areas we drew on the daily time frame, right? So what will happen if the market opens? Let's push back this. Let's also push back this. All right, good. Let's push back this. So good. So if the market open, you can see this is the current market price. So if the market open, what we are expecting, we're expecting something like this. This area is not too strong. This minor resistance somewhere here, or the minor support here, is not too strong. So don't rely so much on this. Don't just buy when the market open because you say the market is already bouncing. No, let's wait to see if the market is going to push back right down here, and then we buy from here. If we are buying from here, what are we going to do? We're going to be buying from here. Our stop loss will go somewhere there, and we go for a risk to reward of 1:2 or 1:3. That is what we're going to be doing at the open of the market if the market has to continue shooting down. Remember, this is the 4-hour time frame. This is more of swing trade. As a beginner forex trader, stick on the higher time frame like the 4-hour time frame or even the daily time frame. I see on the internet people advise you think maybe the lower the time frame, the faster you're going to make money. It's instead the irony. The lower time frames are full of noise. There's too much noise on the lower time frames. So when you're just starting, stick with the higher time frames like the 4-hour time frame, because your vision is going to be very clear. You can see key areas. You can easily make your analysis, and trading on the higher time frame becomes passive because you place your trade. You have flexibility to be doing other things while the money is printing. All right. So that's an advantage. That's why I always talk about the 4-hour time frame and the daily time frame. So this is what we'll do as soon as the market opens. If the market push back, it might maybe if the market is coming here, it might be maybe Tuesday or Wednesday before the market will be getting here. I don't think the market can just shoot here on Monday, but we'll just wait. That's why you have different currency pairs. You have different assets. So you just wait for that particular setup to occur. For the market to push back and we only buy somewhere, this is where we'll be expecting to buy. What if the market doesn't push up and at the market open, we instead see the market continue shooting up? Then what are we going to do? We'll wait for a break and a retest. That retest is going to be this key area. This key area has given us a lot of confluences. Remember, this line you are seeing is right from the daily time frame, this particular line. And since this line is line from the daily time frame, we also have this particular trend. So this area is going to give us a lot of confluences. All right. So if the market open and the price instead shoot up, then we'll wait for a retest on this particular key area. Then that's where we'll instead get into the trade somewhere here with the risk to reward of what? with a risk to reward of 1:3. If we are getting in somewhere there, our stop loss will just go somewhere here, and we'll be targeting somewhere risk to reward of 1:2, 1:2 or 1:2.5. Perfect. So that is where we'll get into the market. That is where we'll get out of the market. And if the market push down here, we'll just do the same thing. We'll just come here. We'll buy somewhere here. We risk about 80 pips, or I don't think this is almost about, if we are risking here, this is almost about 75 pips, and we are going for 161 pips. All right. So that is what we're going to be doing when it comes to Nasdaq as soon as the market opens. All right. Good. So let's go to another currency pair that also on gold. On gold, I made 2%. Remember, on Nasdaq, I made 3%. GBPJPY, I made 3%. And on gold, I made 2%. So let's go to gold to see what happened last week and also what we're going to be doing this week. Perfect, perfect, perfect. You can see here, this is the same analysis we did last week. We're not even going to waste time on this pair. We did the same analysis, and I told you guys, anytime I start seeing a triangular pattern like this, I know the market is going to be explosive very soon. And even at that, if I have to zoom in, I told you guys, look at this trend. Right from here, this is right from the 1st of November 2022. More than 6 months ago, we've been in an uptrend on gold, in an uptrend. And I remember this particular area, I did a video and I mentioned, I remember we were either in France or Finland when the market got to this particular area. And back in France, I told my wife, the market has gotten to a key area where I've been waiting for when it comes to gold. And no matter what happens, so long as we keep going on this world tour, I'm just going to be bullish on gold. And I kept buying. Even when the market retreated, I kept buying until the market got here. When it got here, I was waiting for the market again to push back to this same area. And there we are. We are on this same area. So no matter what any person has to say, I am very bullish on gold. Gold is going to go up. I don't care what. Gold is going to go up. Gold is very, very bullish on the 4-hour time frame, the daily time frame, and even fundamentally. Fundamentally good. Let's talk about fundamentals, because that is still another thing you used to have a point of confidence when it comes to trading, right? So let's talk about fundamentals. Fundamentally, on Friday or within the week, we had what we call CPI. What does CPI? CPI measures the spending power of consumers in a particular economy. So we had CPI for the United States dollar, or CPI for the US economy. And on that CPI, I even did the analysis. If you want to watch the video I did about CPI, just click the link above to watch that particular video. I did an analysis and I told people very, very well that the CPI was going to be negative for the United States dollar. I told people, I did it live on Instagram. I did the analysis live on Instagram. I took the trades live on Instagram, and I made the money live on Instagram. So if you haven't watched that video, just click the link above to watch that video, and you'll be able to see in real time that we know what we're doing and we don't do this with guesswork. We have high probability that the market is going to go according to our way. All right. So CPI was negative for the United States dollar, and since gold is XAUUSD, what are we expecting gold to do? If gold is XAUUSD, USD is the secondary or the quote currency, meaning if a particular fundamental is negative, any currency pair that has the United States dollar as a first currency like USDJPY is going to be going down, while any currency pair that has the United States dollar as the secondary or the quote currency like SAUUSD, GBPUSD will be going instead up. All right. It is counter fundamentals. That's an inverse relationship. All right. Any currency pair that has the United States dollar as a secondary or the quote currency, you instead expect that particular currency pair to go up. And what if the fundamental was positive? What if the particular news was telling you that the United States dollar is going to be positive? Any currency pair that has the United States dollar as the first currency will be going up, while any currency pair that has the United States dollar as the secondary currency pair like gold will be going down. So in our case, the United States dollar, a CPI, the two most important fundamental news when it comes to the United States dollar is CPI and NFP. CPI was negative for the United States dollar. And since CPI is negative for the United States dollar, where do you expect gold to go? You expect gold to be going up, since gold has an inverse relationship with the United States dollar. That is why you see something happen here. This is what happened last week. CPI occurred somewhere here. This is where you can see this long candle somewhere here. Let me make it very clear for you guys to see. So we had this long candle somewhere here, this red one. After we had this particular long candle, what happened? So the news on CPI was somewhere here, and in forex trading, after every major news event, there's something we used to call a correction. The correction, meaning if the news is released here and the market shoot up for 100 pips, 90% of the time the market used to push back down to that particular level before the original trend is resumed. So immediately after that news event, even though the market was supposed to go up, what did we see? We saw a correction. So I just started saying to myself that, okay, this is just a correction in the market, and as soon as I have a buy opportunity, I'm going to be getting into the market. So I got in somewhere here. Remember, this same structure we are seeing here is a structure I told you guys since last week that as soon as the market gets to this particular zone, what am I going to be doing? I'm going to be looking to buy. So even if you bought this market on Friday, you bought it somewhere here, or as soon as market got to this same area, you would have already been up with plus 227 pips. Can you see? This was the analysis. Go back and watch the video I did last week. This was the analysis. You would have already been up with plus 227 pips. But that's not what I did, because immediately after that fundamental news, I bought, but my entry was somewhere here. I entered somewhere here. Let me show you guys this. If I can go down to the 1 hour time frame, let's go back to the 1 hour time frame on this, because I was entering on the correction, right? Let's go on this. Perfect. On the 1 hour time frame, this was my entry somewhere here. Let's just go on long. So my entry was somewhere here. If I have to put this, my entry was somewhere here, and I was just risking about, I think my risk was almost about, let me see, almost about 120 something pips, and I was going for 300 pips. That's it. So this was where I got into the trade somewhere here. If I can push this right inside here, you can see this was where I got into the trade somewhere here, and I was risking almost about 100 pips, and I was going for 300 pips, and boom, the market didn't even go in our favor for long, and the market didn't even go against us for long, and we got back into the trade. We made 300 pips, and that was a risk to reward of 1:2. So that was what I did on gold. Perfect. Now upcoming this week, now what are we going to do coming this particular week? This is what I want you guys to be able to see. We are still very bullish on gold. No matter what any person has to say, we are still very bullish on gold. So this is actually the current market price when it comes to gold, right? Let me delete this. This one was for last week and it obeyed. So this is what we are expecting to happen. Let me delete this again. This. Good. So the current market price is here. Let me make it very clear. So what are we expecting to happen? At the open of the market, we're going to be looking to buy on gold. There's nothing to even think about that one. At the open of this market, we have more like a break and retest structure, right? So at the open of the market, we're going to be looking to buy gold. Very clear. I hope you guys are getting the signal very clear. At the open of the market, we're going to be looking to buy gold. So we're going to be going long somewhere here. At the open of the market, this is where we're going to be going long. We're going to be risking about 100 pips. Let's risk about 100 pips and go for 300 pips. Risk to reward of 1:3, right? Risk to reward of 1:3. Good. So that is our target when it comes to gold. As soon as the market open, we're going to be buying gold. We're going to buy gold. We're going to risk 100 pips, and we'll be going for what? We'll be going for 300 pips. And as soon as we buy gold, what are we going to be monitoring? We're going to be monitoring to see price reaction somewhere here. If we buy gold somewhere there and the price instead push down, then hopefully the market shouldn't trigger our stop loss. But if it triggers our stop loss, then you instead be expecting something like maybe a break and retest. Maybe the structure is actually changing into a down trend. But I'm still very bullish. I'm still very bullish on this particular currency pair, right? So this is what we're expecting. We are expecting the market to do that at the open of the market. The market may actually shoot up. You see it pushing back right down to this particular support again before going up. But as soon as the market open, we're going to buy here, our stop loss here, so that whatsoever thing is happening in between, at least we are still going to be in the trade. So that's what we're going to be doing as soon as the market opens. All right, there's no waiting when it comes to gold. Perfect. Let's go to the next currency pair, which I made 3% of my account. This currency pair was Great Britain Pound JPY. Let me put this Great Britain Pound JPY. You can see this was our analysis for last week. I don't even need to go far. This was our analysis for last week. And what did I say? This was last week at the close of the market, or when I was doing the analysis on Sunday. This is actually Sunday. This is Sunday. Anywhere you see this, this is Sunday, all right? This was on Sunday last week, and I gave you guys two scenarios. I told you guys, it's either the market, as soon as the market opens, I'm not going to take any decision. And remember, before I do any of this, the first thing I always do is to be able to determine the overall market trend. The overall market trend, Great Britain Pound JPY is bullish. Great Britain Pound JPY has been in a bullish trend since more than 1 month ago, or more than 2 months. Great Britain Pound JPY has been in a bullish trend. So that's what I do. I determine my key levels, and since I already know that the market is bullish, I'm only going to be looking for bullish trade on the higher time frame. And this is what we concluded on Sunday. I told you guys that if the market opens and the price has to push back down here, this is what I'm going to be looking to buy. But if the price doesn't push back, these are scenarios where you need to wait for the price to be able to play out and give you a particular setup. You need to be able to wait for the price to be able to play out and give you a trade. So I said the first waiting was to wait for the price to get here, and if the price doesn't get here, we're going to wait for a break and retest. So you see what happened? The market opened, the price pushed back a little bit, didn't get here, and just produced like a lower low, like a higher low. Because remember, higher highs, higher lows, all right? The market just produced like a higher low, and you would have even gotten in somewhere here, but I wanted a key, so I didn't get out. I didn't get into this particular trade, and the market shoot up, and you can see the momentum. The momentum this market used to be able to pierce this particular support, which became this particular resistance, which became our support. As soon as I saw this momentum, I was like, okay, this market is going crazy, it's going forever. I'm just going to be waiting for a pushback to buy. So what happened? We had this particular pushback, and you can see this particular consolidation we had here. As soon as we had this particular consolidation here, this is where I got into the trade. I got into the trade here, and I went for a risk to reward of 1:3. This is where I got in. My stop loss was somewhere here. I was risking almost about, where is my stop loss again? I was risking about 120 pips, and I went for 300 pips. And boom, just here, just after a day, not even up to a day, after about 4 or 5 hours, boom, we already hit our target. Let's go back to the 4-hour time frame so that you guys can see very clearly. All right, good. On the 4-hour time frame, that's it. Immediately I got in somewhere there. After about 4 hours, I already hit my target. I got in somewhere here after we had this consolidation. I was just risking about 120 pips, and I was going for 300 pips. And immediately after, within a day, boom, I just got a notification, boom, target hit, and I already made 3% of my account. So that was 3% on Great Britain Pound JPY, 3% on Nasdaq, and 2% on gold, and boom, that's 8%, and I just passed phase 1 on this particular account. You guys can see that those are all the statistics. Pass and 2 minutes. I used a total of 2 days to be able to trade the account, and even though they gave me 5 minimum trading days, I'm just waiting now for 3 more days, and phase 2 will be given to me, and hopefully I'll use a day or two past phase 2, and now I have $200,000 to trade on that particular account alone. So that is what I did. So for now, what are we going to do now coming this week? The market is still in an uptrend again, and coming this week, I'm going to be expecting the same structure. You can see somewhere here, let's just do this. Let's just do this. This is a situation where, let me just put this. This is a situation where I can bring in now another tool, because you know me, I'm not fond of indicators, but there's another tool which is very applicable in Forex, which is called a Fibonacci tool. Because this market, I'm expecting a consolidation, or I'm expecting a retracement, then I get into the market. But how far am I going? How far is that retracement going to go for me to get into the market? That's where another tool can be able to help you, where you actually bring in your Fibonacci. You draw from here to the top of the market. Where is the Fibonacci again? This is the Fibonacci tool. Let me just remove this. Okay, this is the Fibonacci tool somewhere here. Just a minute, guys. Let me bring in the Fibonacci tool. Okay. Fibonacci retracement. So you actually bring in your Fibonacci tool. You draw from the recent swing low in the market to the most recent swing high in the market. This is the most recent swing low in the market and the most recent swing high in the market. So you draw your fibs from here to here. Boom. You draw your fibs from there to there, and what do you wait? You wait for the market to push right down to what? To the 50% level or the 68% level. The 50% level, either the 0.5% level, or you can also call it the 50% level or the 61%. Or if that particular platform is not putting it in terms of percent, you can wait for the market to push down to what? To the 0.5% level or the 0.61% level. So after just dragging my feet from the most recent swing low in the market, I did a video about the Fibonacci explaining everything. So just go on my channel or click the link above to watch the detailed video I made about the Fibonacci to be able to see how you can use this particular tool, right? Good. So you just draw your fips from the most recent swing low in the market to the most recent swing high, and you wait for the market to push right down to the 0.5%, 0.5 level or the 0.61% level. Or you can also call it the 50% level or the 61% level. So these are the two key levels. As soon as this market push right down here, so what I'm just saying, as soon as this market push right down to this area, I'm going to be looking to buy here. Or if it continues going down, I can still, this is still a buy area. So all of this area is a key area where I can buy. All right. So if this market has to push right down here, that is the consolidation we are waiting for, because the Fibonacci tool will just give you the level of retracement that can occur in the market before the original trend resume. So the Fibonacci tool will be able to tell us, okay, as soon as the market retrace and get to this particular area, that is where we can get into the market to be able to come out with a winner. So as soon as the market gets in here, boom, I'll be waiting to buy here. I'll just come here with my long tool. I'll buy there again, and I'll go. I can put my stop loss just somewhere here. I can risk almost about, let's risk about 100 pips, and we can go for even a risk to reward of 1:2. If you're doubting, you can go for 1:2, and if you see, or 1:2.5, all right, my stop loss can just go here and my take profit go here. I go for a risk to reward of 1:2.5, meaning if I'm risking $1, I'm going for $2.5. I'm risking $1,000, I'm going for $2,500. So that is what we are waiting at the open of the market. And if the market opens and this price just continues shooting up, then as soon as we have a swing, let's just say the market open and you just see the price continue shooting up like this, right? Then we'll be waiting for a swing in the market. We'll be waiting for a swing in the market. As soon as we have this swing here, now we have what? We have our significant swing low here, and we have our significant swing high here. So we instead draw our fips from here to here, and it will be able to give us a key area where we can enter. That's what we do at this particular point in time, all right? This is not a key area where you wait for the market. No. Now you need a tool to be able to tell you the degree of retracement that can occur in the market before the original trend is resuming. So that's what we'll do when it comes to Great Britain Pound JPY. Good. Let's quickly now go through other pairs so that we can go through as many pairs as possible. As many as possible, right? Good. You can see here we have Great Britain Pound USD. And this formula, you can see there's a formula on the screen. This was the formula I was giving you guys that enable you to be able to calculate the specific percentage you are risking in one trade. That is risk management at its core. All right, that is risk management at its core. You need to be able to know how to calculate that, to be able to calculate and manage your money effect, because risk management is key when it comes to trading. So this formula on the screen, I'm going to just put the video again so that you can just watch me calculating that particular formula, or you can just go on the video I did last week and you'll be able to understand this particular formula. So the formula is even still on the screen. That's why I'm even remembering. Good. So this was our analysis last week. And what did we say? We said at the open of the market, this was at the open of the market, what were we expecting? We're expecting a retracement which actually occurred. I would have even gotten into this trade somewhere here. We're expecting a retracement, and after that retracement, we'll get into the trade, because why? We were still very bullish on Great Britain Pound. You can see we had like a break and retest. This break and retest, this is the same analysis we did last week. We had this break and retest where the market break here, come back and retest, and now instead of the market forming lower highs, lower lows, lower highs, lower highs, we started seeing what? Higher lows, higher highs, higher lows. When you start seeing that, it means the structure has changed and the market has moved from a downtrend to an uptrend. So since we already know that the market was now in an uptrend, we're only looking for buy trade. Period. We're only looking for buy trade. So, but I told you guys, this was at the close of the market. I told you, as soon as the market opened, let's wait for a retracement, then we get into it. So you would have gotten in here if the market didn't get here. That was the first scenario. Or even if you didn't get here, this is still see the same area. Even if you didn't get here, you would have still done what I told you guys on the second scenario, which the market will do what? The market will do the break and retest. The market will come back, break this particular resistance somewhere here, then you see what? A retest. This is a retest. The diagram is even still there. You will see the market will come back here. You would have gotten in plain here. I never took this particular trade, but if you can check screenshots like this is actually a subscriber. This is somebody who actually took the trade. I remember I said, so I just took that trade on the break and retest on GBPUSD, and boom, I just made 3% of my account. Period. That's it. So you just see that particular structure, you get in somewhere here, you put your stop loss somewhere here on around 50 pips, and you go for maybe 150 pips. 1:3. 150 pips, you would have gotten out within a day. You would have gotten out on Friday. You see, so you just put your stop loss here, you go for 1:3, and boom, within a couple of almost about 3 or 4 candles, your take profit was already hit. So that was that about the last week, and people make it, people pass their challenges. So what now coming this week now? What is going to be happening this week? Let's see. Let me see if I can clean this chart. What is going to be happening this week on GBPUSD USD? This is where we need again our tool, right? Let me try to clean the screen again, so that we can be able to see most of these things, right? Good. I just need some space because I'm going to be doing an analysis here, and I don't want our screen to be too dirty. Good. So that's why I'm deleting some of this. I already showed you guys what happened last week, so I can delete these things so that we can have space to see what is going to be happening coming this week. Good. So now you can see very clearly that is our current market price, and what are we expecting? You can see our most significant swing high in the market was where? This was where I can call our most significant swing high in the market, swing low in the market, and this is our most significant swing high in the market. So this is where, since we don't know very well, the market is still bouncing. Let's wait. Let's draw our tool again. The market is forming support and resistance, and here is our support and here is our resistance. So we are trying to look for point of confluences. Even if we bring in our fibs from here to here, you can see this is the 50% and the 61% level, right at what? Right at that particular key confluence level. So at that, we are just waiting at the market. At the market open, what are we waiting? We wait for the market to push back right down here at the 50% level, or the 61% level, or the 0.5 level, or the 0.61% level, which is also going to be a point of confluence. Key point of confluence, because what can you see? This is a key point of confluence because the market is doing what we call a break and retest. This was when the market actually break this particular resistance, which became a support. So at the open of the market, we'll be waiting for the market to push back right down to this particular resistance, which became a support. And also on our FIB, you can see that we also had another point of confluence on our Fibonacci, which is the 0.5 and the 61. So we're going to be having 2 point of confluences. And when you have 2 point of confluences, it gives you a high probability. Remember, trading is a game of probability. So the more confluences you have, the more probability the trade can go in your favor. So if the market actually play out in that particular way, then voila, that is a probability that we'll be able to get into this trade somewhere here, and we go for a risk to reward of 1:3. So we just go in somewhere there, put our stop loss somewhere here on around 50 pips, and we go for maybe 150 pips, 1:3, and we are out, or 1:2, based on how long you want to stay on the trade, and we are out. So that is what we're going to be waiting at the open of the market. And if the market open and this price doesn't push back to this particular point of confluence and continue going up, then we'll wait for the market to form the most significant swing high. Remember, here we're considering this one our most significant swing high because that's where the market closed. But if the market open and the price continues shooting up, then we'll wait for the most significant swing high. Our FIB will instead be drew from here, from this particular area to this area, then the point of confluence will actually be somewhere here, and we'll wait for the market to come back there and we'll buy again, unless the market, instead of going like this, you instead see something like this, at this particular area. That means the structure has already changed from an uptrend to a downtrend, and now instead of looking for buy trades, we're only going to be looking for sell trade. But to now, GBPUSD is still in a bullish trend, and we're only going to be looking for bullish trade unless the structure or unless the price is changed. So what do we have here? We have a EURJPY. And on EURJPY, you can see the market is going to the moon. most all JPY pairs, if you can see this, any JPY pair we're going to go through, you see the same thing. So you just do the same thing on most JPY pairs, because JPY pairs had similar price structures, right? Great Britain Pound JPY, EURJPY, USD JPY, AUD JPY, most CAD JPY, most JPY pairs had the same price patterns, and you're just going to do the same thing. So even if we don't analyze other JPY pairs, you're going to just do the same thing I'm going to be showing you on these few JPY pairs we've analyzed. Because you can see here, this is EURJPY. This was our analysis last week. This was on Sunday. We analyzed that, okay, if the market has to be pushing back because it was forming more like a triangular pattern. We said, okay, if the market has to come back to this particular resistance, then we should wait to see if the market can form what we call a break and retest. This area was actually, this is a break and retest that actually occurred here, because this is the 4-hour time frame. On the 1-hour time frame, you see this break and retest very, very clear. Very, can you see this? On the 1-hour time frame, the market came back, break this particular resistance, then come back and retest this, and boom, this would have been a key buy opportunity. Like I said, you will never take all the trades in Forex trading. You will never take all the trades. So fortunately or unfortunately, since I was busy making money on other pairs, I didn't take this trade. But this is the break and retest structure we're talking about. The market break this particular resistance, came back to retest, and now that resistance became our support. You would have gotten into this trade somewhere here. Can you see this? This is a key buy signal that you would have gotten into this trade the same way we analyzed. And even if you were going for a risk to reward of 1:8, you would have hit that market, or 1:5. These are samples of trade where you can go for a risk to reward of 1:6. Meaning you risk 1,000 and you go for $6,000. Let's just bring in our buy too, because you would have bought somewhere here. You put your stop loss somewhere here on around 775 pips, and you can even go for 300 pips. You see, you can even go for, this is a risk. Even if you go for 400 pips, let's just go for 400 pips. 400 pips is a risk to reward of 1:5.5. 1:5.5. And see what happened. We hit that particular target. You can see the price already hit that particular target. The market was just in an uptrend. By the end of the week, we already hit that particular target of a risk to reward of 1:5. Can you see this? Meaning, even if you were going for a risk to reward of 1:3, you would have still gotten out of that trade within a couple of hours or within a day. You just made 1:3, 1:4, 1:5. Even if you were going for 1:6, by now you can see that's the risk to reward of 1:6.1. You would have still made 1. If you have a risk to reward and you have trades, let's just say you are using a risk to reward of 1:5. Out of every 10 trades, you just need to have just two trades right. Even if the rest 8 trades are wrong, you will still be a millionaire. You will still be making money, because those 2 trades you just have, which are all right, you just made 5% and 5%. You just made 10% of your account. Then the other 8 that are wrong, remember, you're losing any trade. You are risking 1%, meaning you can lose just 1%. So out of 8 trades, you've lost just 8% of your account. If you subtract 8% from 10%, you are still up with plus 2%. Plus 2% is a lot in Forex trading. You need to be grateful for any small percentage you gain in the Forex market. If you are trading something like a $200,000 account and you make 2%, that's $4,000. So 1% is very, very, very important in Forex. It just depends on the account size you are using. So that's that. Okay, now since the market played that way, the way we anticipated last week, what are we going to be anticipating this week? What are we going to be doing? We're going to be doing the same thing we've been talking about all the time. So we're going to be doing the same thing. Let me clear this. We're going to be doing the same thing, which is what? Looking for the most significant swing high. The most significant swing high is going to be there. The most significant swing low is here. Now we can bring in our fib. We bring in our fib. This is our fib. We draw our Fibonacci from the most significant swing low to the most significant swing high, and then what? We wait for the market to push back to our 0.5% level or 0.61% level, which is going to be 0.5% level is going to be this level or this level. So if the market has to push down to any of this particular, to this area, this is where we'll be looking to buy. And if you are looking to buy here, you go for a risk to reward of 1:3. Meaning if you buy there, you can put your stop loss somewhere here on around 100 pips, and you go for 300 pips. Boom. 1:3 or 1:2. It just depends on how long you want to stay on the trade, and it also depends on your risk appetite. So even if you are going for 1:3, you're just going to be risking 100 pips, and you'll be going for what? You'll be going for 300 pips. Voila. So that is the trade we're going to be waiting. What if the market doesn't push back to this area? We're going to just do the same thing. We're going to wait for the market to do what? To continue going up to give us, let me close this. We're going to wait for the market to continue going up to give us the most significant swing high. And then we're going to consider this now as our most significant swing low, our most significant swing high, and our FIB is instead going to be drew from year to year, and we'll wait for 51% level or the 61% level to get into the market. Because even fundamentally or on the higher time frame, we are still very, very bullish on what? On Great Britain Pound JPY. Very, very bullish on this is Great Britain Pound. And if we have to go here, let me just go here. Let's go here and let me show you this. Can you see? We are still very, very bullish fundamentally or on the higher time frame on Great Britain Pound JPY. Very, very, very bullish. These key areas are the key areas we spoke about even when we were in Europe, even when we were traveling the world. I remember I used to trade this pair, and we talked about this particular structure over and over and over. This one was right in January. The market has been in an uptrend. This one somewhere here was just a break and retest. The market break, a retest, and boom. Even if we're trading the daily time frame, the market has been in an uptrend. So we are still 200% or 2000% very positively biased when it comes to EURJPY. All right. So that is that on EURJPY, and the same analysis is going to go for all JPY pairs. Let's just take for an example something like what? CAD JPY. The same thing on CAD JPY. You can see the same thing on CAD JPY. You just do the same thing. The same analysis I gave for Great Britain for EURJPY. Use the same analysis for any other JPY pair like CAD JPY, NZDUSD, AUDCAD, all JPY pairs. The reason why I like JPY pairs sometimes is because JPY is more like a safe haven currency. So when you are trading any currency pair or any other currency against a safe haven currency, the market can easily take one direction and go on that direction without counteracting. Meaning if it wants to go up, it will go up. If it wants to go down, it will go down, because you are trading a major currency against a safe haven currency. So that's the same thing you'll be able to do when it comes to what? When it comes to CAD JPY. CAD JPY, this was last week. This is where the market closed last week. And what did I say? I said if the market open, we should expect the market to push back and we buy here. Or the market doesn't push back right down here, we should expect the market to give us a break and retest. And voila, look at what happened. The market break, came back, gave us a retest. We got in somewhere here for a risk to reward, put our stop loss somewhere here, our take profit on 1:3, boom, we're already out of the trade. Simple. So the same thing will happen at the open of the market. This is our most significant swing low, significant swing high. You bring in your FIB from here to here, wait for the market to push right down to the 50% level or the 60% level, and you buy. Go for a risk to reward again, 1:2, 1:3. The same thing will happen for all JPY pairs. Good, let's go to other pairs that are not JPY pairs. Since JPY pairs will have the same similar patterns, the same analysis, the same way you used to be able to trade. All right. Remember, I'm bringing in my FIB because when you only bring in your FIB when the market hasn't given you any clear area where you might be anticipating the market to hit your support, or where you might be anticipating the market to hit your resistance. That's why we bring in our FIBs. Good, let's go to the next currency pair, which is what? Great Britain Pound AUD. Let's see how this play out. I can already see this was last week. This was last week, and this is the 4-hour time frame. And this one would have knocked us out because remember, we got into the trade somewhere here, and our stop loss, this is what we call stop loss hunting. You can see. So the market hit us out. If you were to respect just the same structure I put last week, look, the market just came back at just our stop loss, then continue going in our favor. So that is what they call stop loss hunting. That is when you don't give your trade room to break. So even though we're going for a risk to reward of 1:2.5, if our stop loss was a little bit, if we're risking like about 175 pips to go for like almost 500 pips, then it would have still been in the trade by now. You can see we're still in it, would have still been in the trade. Anyway, that was history. Let's see what is happening now and then look for the way forward. All right, let's see what's happening. The market is still giving us more of a clear uptrend here. We had that particular trend. We also had this particular one somewhere here. Let's just quickly see where the market is going. So now the market is trying to form, it's trying to form more like a break and retest on the downside, because you can see the market already break this particular support line. Now the line is acting like a resistance and it's trying to retest somewhere here. So what I might be trying to see is this market to start printing what? To start printing lower lows, lower highs, lower lows, lower highs, and instead push on the downside. So let's wait for the market to open. Let's not sell yet, because overall on the higher time frame we are still on a bullish. So let's wait to see if the market will open, and if the market opens and the price push down and form the same structure, and then we'll instead be looking to sell. The structure has already changed from an uptrend to a downtrend. But if the market open and it push back into this particular trend, then we'll be waiting down for the market to push back to this particular resistance, and we instead buy somewhere here. Period. That is what we're going to be waiting when it comes to what? When it comes to Great Britain Pound AUD. Let's go to EURJPY. Another pair you guys have asked like all the times. EURJPY. Can you see this? This was last week. This was last week, and this was on Sunday. What did we say on Sunday? We're waiting for the market to push back to this particular resistance. Then we'll be looking to sell somewhere here and push down. This is it. And push right down to the downside. So even if you sold somewhere here, you would have already hit your take profit or still in a trade. So the trend is still holding. The trend is still holding 100%. This is still clear down trend on Great Britain Pound AUD. So this market might still come right down here. This is the current market price, and you can expect this price to still come right down here. Then we look for a way. Remember, I don't like trading against the trend. If it comes right down here, we'll wait for it again to come back to this particular trend, and then we sell again. Unless it comes right down here, then we see something like this, then we'll continue on the opposite side. And if it comes right down here, and we are instead expecting the market to get, and it gets here, you might still expect to see something like this. So the trend can still change the direction, but you just use that same style. Remember, even last week, we were anticipating the same thing somewhere here. We were anticipating that, okay, if this market gets here and this trend has to break this line, we'll wait for what? A break and retest. That didn't happen. The market got here. The people that sold, if you can also check again, I'll check most of those screenshots, most of those comments. So many people sold here, and voila, now they would have already been in profit of almost about 61 pips. So even if you were risking about 25 pips, now you would have already been in profit of about 1:2, or in a risk to reward of about 1:2. So that is what happened last week, and I already gave you again what we're going to be looking out for this particular week. Let's go to the next one, which is most people's favorite, EURUSD. On EURUSD, the same thing we saw, the same thing we analyzed last week. This is the same thing we analyzed last week. Last week we were somewhere here, and what did we say? Let's wait for a break. Let's wait for the market to push back and give us a point to enter. And the market did just that. And as soon as you see, the line is still there. The line is still there as we speak. And what happened if you would have gotten in somewhere here, go with your stop loss here, by now you would have already been out of the trade. Now that is history, like I always say. Now going forward, what is the way forward? Let me delete this so that we plan for the coming week. So going forward, this is already our next significant swing high, and this area is still very, very a key area of importance, because you can see the market has been consolidating here, 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 here. So this area also is still a very key area of importance. All right, so now what do we do again? This is our most significant swing low, significant swing high. So we can actually use the feed to be able to look for key areas where we can jump into this trade again. So now you can see we have the 50% somewhere here, and we have the 60%, the 50 and 60% somewhere here. And if we have to extend this particular resistance line, you can see that is still again another key point of confluence. So if this market has to push back right to this particular point in time, we'll be looking to get in somewhere here. And if it doesn't push up and continue to do what I can see the market might be doing, because you can see this key area I showed you, this might be acting as a support already. Then you instead expect something like this, like this, like this, like this, like this. So as soon as we have this, we'll wait for this to happen, then we'll enter somewhere here. And your FIB2 will be able to help you to be able to know these key points where you can jump into the trend again. For now, we are still positively biased. We are still very bullish on EURUSD, because we already saw this same structure, the break and retest. This break, the market was in a downtrend when we were in Europe. or traveling the world. The market was in a downtrend. Immediately we came back, the market break this area, came back and retest and continue going up. The same structure we saw on what? On Great Britain Pound USD. That's when you keep trading, after some time, you just open your chart and you already know what is going to happen. Because you've seen that over and over and over and over again. This is the same structure that happens on what? On Great Britain Pound USD. Go and check Great Britain Pound USD. The same structure. So that is the same way I'll be waiting to trade what? To trade the euro, to trade euro USD. Perfect. I would have spoken about USD/JPY, but all JPY pairs I already explained. You use the same analysis we use on EURJPY. Let's go on the next currency pair on our list, which is NZDUSD. NZDUSD, this is the same thing we analyzed. The same thing we analyzed last week. We said last week that, okay, there was going to be a high probability where if the market gets to this was on Sunday. This was on Sunday. We said, okay, we're going to be doing two things. I even told you guys to sell on Sunday because this was a key area. I was in the downtrend, and I told you guys clearly to sell somewhere here, put your stop loss and go for a risk to reward of our 1:3. But if the market doesn't go your way and instead trigger your stop loss, go and watch what I said on Sunday. I said if the market doesn't go on your favor, which will happen, you can't win all the trade. It's very, very clear. If the market doesn't go in your favor and instead hit your stop loss, then wait for the market to pull back and give you what they call the break and retest. And you can see this was the break and retest. As soon as you have this break and retest, you would have gotten in somewhere here for a risk to reward of what? About 1:3, and boom, by now you would have already been going up in a trade. So let's just go here, we buy here, put our stop loss here, and we go for a risk to reward of let's put our stop loss somewhere here. Let's not suffocate our trade, and we go for a risk to reward of 1:3. Boom, you can see 1:3 right there. Meaning by now would have already been up with the risk to reward of 1:2 in profit. So that is that when it comes to NZDUSD and how to trade NZDUSD. The next currency pair on our list is going to be AUDUSD. AUDUSD, this was our analysis for last week. We said, okay, this was on Sunday. We said if the market has to push around down here, this is what we're going to expect. We even pointed this break and retest structure somewhere here. So this week might just be an extension of that, all right? Let me delete this. Excuse, then I bring in this one. This week might just be an extension of that. So at the open of the market, let's expect the market to push down and for us to get in at this particular area to push back again with the uptrend. And if it doesn't get in and continue instead shooting up, then we'll wait for a retest back at this particular confluence line to jump into a trade, all right? So at the open of the market, we're going to wait for the market. If the market has to push back to this point, we're going to be buying somewhere here, stop loss somewhere here, take profit, risk to reward of 1:2 or 1:3. That is that on AUDUSD. Let's quickly go to US30. On US30, this is the same structure we saw last week, right? At the close of the market, we said, okay, if the market has to push here, we'll be buying somewhere. We're already positively bullish. We're already bullish. We're having a bullish bias when it comes to US30 because you can see the structure was already broken somewhere here, and we had something like what? Like a break and retest. And now instead of a downtrend, US30 was on an uptrend. So the whole of this week, we're going to be expecting the same thing. You can see we have more like a retracement here. This is where your FIB will be able to help you know where to get into the trade. This is our most significant swing low, significant swing high. If we have to bring our FIB from the most significant swing low to the most significant swing high, which is that point, you can see the 50% is somewhere. This is the 50% and the 60%. So all this area, we can be looking to jump into this trade. If the market has to push back into this particular area, we should be looking to jump into this trade somewhere here, put our stop loss there, go for a risk to reward of 1:2 or 1:3. I already gave you a formula you can be able to use to calculate the specific percentage that you're going to be risking on that particular trade. So that is that about a US30 and what you should do at the open of the market. So you just wait, bring in your FIB, wait for the market to push back down here for you to get into the trade. Or if it continues pushing up, then you wait again for another significant swing high. Then you bring from significant swing low, significant swing high. The market is going to be, that too is going to give you a point of confidence to jump into the trade. Let's go to another currency pair which you guys have all demanded, which is what? Which is Great Britain Pound CAD. Great Britain Pound CAD for this week, we didn't analyze this currency pair last week. So let's just quickly go on the daily time frame because that's where most of the time, I always like to start my analysis on the higher time frame so that I have an idea of where the market might be going. So that is our resistance and that is our support. So after knowing our resistance and our support, you can see we are positively biased on this currency pair. There's a high probability this market might still shoot right up here before continue shooting back down, or shoot right up here, do what we call a break and retest and continue going up. So since we already know this is our key point we're going to be targeting and this is the current market price, let's see on a daily time frame what we can do. Good. This is the daily time frame, or this is the 4-hour time frame, sorry. On the 4-hour time frame, let's just see this. Let's zoom out to see. Let's zoom out to see if there's any action we can take as of now. Let me put this. So on the 4-hour time frame, you can see the market is still on a clear uptrend, meaning even if we want to jump into this trend somewhere here, it wouldn't be a good idea. Now we are looking to buy. Where can we buy this particular market? Remember, on the daily time frame, we are already positive buyer, we are already bullish buyers, and we know that we're only going to be looking for buy trade, right? So now that's where our feed can be able to help us know when we can buy. This is our most significant swing low, significant swing high. Meaning if we draw our fibs from here to here, we already know that this is the 51%, the 50% level and the 61% level, right? Meaning as soon as the price, if the market opens and the price has to push back right down here, then we're looking to buy somewhere here. Put our stop loss somewhere here and go for a risk to reward of about 1:2 or 1:3. And what if the market doesn't push down? The next area we'll be looking to see how the price is going to react is this particular area. And then we'll be able to wait to see if the price is going to reject on this particular area or if the price is going to break this zone. If the price breaks this zone, we'll be waiting for a break and retest. We're waiting for the price to come back, retest that particular resistance, which has become a support, and we'll be able to buy at that particular point in time. But if the price rejects this particular area and we have a good sell opportunity, even though at that point in time some people might take the sell trade, but overall you can see the trend is still in what? The trend is still an uptrend. So long as I have an uptrend, I don't want to look for what? I don't want to look for sell opportunities. Meaning even if this area is rejected, I'll only wait even if I have to wait for the whole week, no problem. I'll wait for the price to come back to my key support for me to start buying again, or I'll wait for the price to give me a particular key area where I can start buying again. So that's what we're going to do for Great Britain Pound CAD as soon as the market opens. Let's take about 2 or 3 more currency pairs and we'll be done for the day, guys. The video is becoming too long, but these are all currency pairs you guys have all requested. Another currency pair you guys have requested over and over and over is this currency pair, which is what? NZD. Where's NZD? Let me just check. EURNZD, yes. This is another currency pair which used to have a lot of good opportunities, which you guys have still requested, which is EURNZD. On EURNZD, again, we didn't analyze on this particular currency pair last week. So let me just quickly go on the daily time frame again so that we can be able to have our key areas. Then from the daily time frame, we can then analyze. Just doing this, you can already see, perfect. This market is in a clear uptrend, very clear uptrend. Do we even need to go far? No, we don't even need to go far to see what we're looking for. Clear uptrend. This market has been in a very clear uptrend, and you can see this is where we currently are. And if on the daily time frame, I can already tell you on the 4-hour time frame, we'll be expecting to see something like a triangular pattern forming. All right, we'll be expecting to see something like that and like this. So let's go on the 4-hour time frame now and find out what we might do, because the market is in an uptrend and now the triangular pattern is forming. What do you do at that point in time? As soon as the market opens on the 4-hour time frame, this is where we are. That's the same thing we're drawing on the 4-hour time frame, right? This is the same point we are. Let me zoom in out so that you guys can see. Okay, good. Okay, so this is the current market price. And are we positively bullish on the higher time frame? Are we bullish on the higher time frame, the daily time frame, or bearish? We're bullish on the daily time frame. Since we are bullish on the daily time frame, if the market opens and the price has to push down to this particular support, which is also giving me this point of confluence, we should be looking to buy here. full stop, we should be looking to buy here. And if the market opens and the price has to push back right up here, we should also be looking to sell here, but hold in mind, just have at the back of your mind that on the daily time frame, the overall trend is an uptrend. So even if you are looking to buy here, your stops should be very tight. You should just put your stop loss somewhere here and you go for a risk to reward of 1:2. So that the market doesn't go in your favor and the price continues going up, you only be knocked out just some, you won't lose a lot on this particular trade, because overall, the overall trend is still a bullish trend, all right? So you might as well just wait. If the price has to push here, wait to see what will happen, because the price might push here, come back here for you to instead buy here, or give you a break and retest for you to instead buy on that particular retest. So that is what you do at the market open. Just wait for the price to push here, you buy here, or if it doesn't come here and continue going up, at this particular point, this is going to be a key area where we'll see price rejecting. If the price rejects this area, we'll wait again to enter somewhere here. And if you break this area, we'll wait for a break and retest and enter somewhere here and join the trend. Boom, that's that for Euro NZD. And then let's do the last currency pair. The last currency pair on our list is what we call AUDCAD. AUDCAD, you guys have requested this particular currency pair, and I'm just going to do the same thing on the daily time frame on AUDCAD. Let's see. AUDCAD daily time frame. Let's see. That's AUDCAD on the daily time frame. Good. I can see something. This is not more like a trend, but I can see this key resistance somewhere here. And I can still see this key area somewhere here. All right. So the market is more like in a ranging. This is a ranging market on the daily time frame. So we can take both buys and sells. This is a ranging market, and now here we can take both buys and sells. On the 4-hour time frame, we can take both buy and sell trades because it is a ranging market on what? On the daily time frame. I can already see an opportunity. That's an opportunity already. So at the open of the market, we're going to be buying AUDCAD. Simple. We're going to be buying AUDCAD at the open of the market. I can already see this minor uptrend on the 4-hour time frame. So at the open of the market, we're going to be buying AUDCAD here. Our stop loss is going to go here on 46 pips, and we'll just go for a risk to reward of 1:2. 1:2 is just going to be here. Boom. That's it. So that's what we'll do on AUDCAD. And if the price doesn't hold and the market continue going against us, then as soon as the market triggered our stop loss, we'll be waiting for what? A break and retest on the downside. And if it goes in our favor and hit us on our take profit, then we'll stick it in a trade again as soon as we have a break and retest at that particular area. So this is a trade we are taking at the market open. We are buying, and we're going to be able to manage our risks and place our stops the same way I have just explained. So with that, those are the key currency pairs we're going to be trading for the entire week. Throughout the week, you guys know I used to always update all the same trades. I'm going to be taking the same trades. I used to always update you guys about the same trades on Instagram. So if you are not following me on Instagram, guys, just make sure you check out my name on Instagram, because I share a lot of trades. All my trades I'm going to be taking, I'm going to be sharing all the same trades on Instagram. And if you want to be able to join my inner circle, trade with me, have live Zoom sessions with me, one-on-one sessions with me, then check out Godlove University. All right, check out Godlove University. The link is on the video description. As soon as you join Godlove University, you will be able to have one-on-one sessions with me. We'll be able to trade these particular markets together. We'll be able to analyze together. So make sure you check out the best Forex in the institution, or the best Forex university in the world, which is Godlove University. You always find the links on the video description. Make sure, please take this particular trade and share your results with me. Share your results on Instagram and tag me, all right? Post your results on Instagram and tag me on those results. Make sure you leave a comment on this video. Please, I'm just begging, leave a comment on this video, and I promise I do reply to all my comments personally. So let me know in the analysis you're going to be looking out for, or even as you take the trades, come back to this particular video and leave your comment, and trust me, I'm going to reply to that particular comment. Go on Instagram, paste your results on Instagram and tag me so that I can be able to share, can be able to see how you're trading. Join me on Godlove University and share your results on the private groups like this. You can see how people are killing it on the private group. So join the private community by joining Godlove University and also share your results so that together we can trade together. If you want to use the same broker I use, make sure you check the link below, because you can know all of this, but if you don't have a good broker, there is no way you will make any money. So check the links below to be able to use the same broker I'm going to be using to trade all this particular currency pair. If you want to use my recommended prop firms, you can also check the link below. Click here to watch the video I made last Sunday, which people passed a lot of their prop firms using the same analysis. Click here to watch another update or live video which we also analyze. Click here to subscribe to the channel, and I'll see you guys on these other videos. Peace.